I would say my biggest advice is just make sure you're building those relationships early and you understand who these people are and you keep them plugged in and in your story, and then it will happen organically.
So I'm Elliot. I went through ODF 4, started an ed tech company that was shut down last month, did a bootstrapping kind of thing. Still exploring a bit. I've known Mr. Yin here for 8 years. It's crazy it's been that long. Yeah, and I thought it would be a good session to have him come in and talk a little bit about, what he's looking at, when he's looking at deals, red flags, anything like that. Himself, of course. He's also like a former operator and still pretty new. So I thought it'd be interesting to talk about that. But this is also for everybody else here. So if you have like specific questions, I would say pop it into the chat. I'll do my best at moderating. But I wanted to be as free flowing as possible. I have a couple of like standard stuff to get out the way, but I'm gonna keep this live and light. Chris, you want to go ahead and just do a quick intro?
Yeah, sure. Thanks for having me. Looking forward to chatting with y'all. And like Elliot said, can keep it pretty light and just hear what we all are working on. And generally say I'm, fairly no bullshit kind of person. So I'm happy to spill the juice on whatever. But look, I think the TLDR is I've known Elliot for many years. My background really quickly. I've been in California most of my life. Grew up around here. Went to college down in San Diego, and after school, kind of jumped right into startups. I mostly because I just didn't know what the fuck else to do. But it was just like a bunch of people building software, and we decided to call it a startup and not ex post. But at the time, it was just building random stuff. Most of them, we were kids, kind of just didn't know what we were doing, right? So I feel like every founder story is like you built, like you're in college and you build like the blackboard replacement because blackboard sucks, and then you like realize that's hard, and then you keep going. And so I went through all of that, and the first 10 things we did were just trash, absolute garbage. And at some point and we were just drinking TechCrunch from the fire hose because we just didn't know anything about this world. And then at some point decided to kind of turn the tables and say, look, like we're building a lot of stuff that people think that we read that we should be building. We should just build something we know how to build them for ourselves. And we were basically running out of money, running out of time, and just like in a sea of despair. And turned the corner and basically said, hey, look, we should build some expense management software. We are like really bad at managing this business because it's a bunch of kids. And so let's do that. And we kind of changed this. We decided to kind of turn that on ourselves and focus on building something that we would use. And it was kind of early enough in the time where you could build something and just throw it in the app store, and like that would actually get you real downloads. And so like we just built an expense management app, threw in the app store. It started to work, people calling us and trying to pay us and things. And we were just surprised that anyone would even use this thing. And then yeah, so it started working. There were just a few of us, and we decided to go out and raise a lot of money because we were basically Expensify at the time. It's a company called Expenser. We were Expensify right around the same time. And basically saw them spending a bunch of money on marketing. We thought we had a better product. We thought we had a better team, and things were working for us. So we ended up going out to raise a little bit of money. One thing led to another, and instead of raising money, we got in touch with a company called Coupa Software. And they had heard about the round. They came and basically, Rob, who's the CEO, he just kind of flew down one day, and this guy, we were like office by the beach and just a bunch of bums, and this guy in like a fancy suit and a car pulls up and is just waiting outside. We're like, I think. And basically he said, hey, look, I'm from this place called Coupa Software. Like, I don't know what the fuck this Coupa thing is, but anyway, like, well, I guess we'll meet with this guy. And he said, hey, look, like, how about this? I want to buy your company. I want to get into the expense management business. And so, we were kind of stunned and didn't know what to think about it. But, fast forward, we ended up meeting the whole team thinking it was a good idea. And the promise is pretty simple. They will teach us how to do sales, and we know how to build products. So we'll do that. And so we'll join the company. We'll help them get into the expense management business and go from there. So I ended up selling the company to Coupa, helped run product at Coupa with Elliot. That's how I got to know Elliot for many years. We ended up helping take the company public in 2016. So it's kind of like, joined around, I don't know, 7, 8, 9 million AR or something. Took it to about 100, 120-ish. And then we took it public. Elliot and I left around the same time, right around the IPO. And After that, started getting into angel investing a lot. And so, mostly kind of meeting people, doing things like this, meeting people and just kind of helping out because I just love the game. And so ended up starting doing a bunch of angel investing. One thing led to another. Got pulled off actually to a place called Rainforest QA in the middle and became the VP product there. One of our engineers at Coupa was engineer one at Rainforest. And so we ended up joining Rainforest. Again, I brought Elliot in later and help run the product team. And, I was there for a few years, realized I still liked the angel investing thing. And some of those were starting to do really well. Companies like Retool and Vise and things like that started to really pick up. And so decided that maybe that would be a good place to explore. So kind of picked my head up and ended up going to a place called Scale Venture Partners, where I am today, doing kind of, classic. So I do two things. One is, still have the angel, so do a lot of pre-seed, seed, early stage investing. And then also doing kind of classic series A, B, and C checks now, anywhere between kind of, let's call it $5 to $30 million, and kind of like the classic, like bigger round. So anyway, that's the short story. Let me stop there. Anything I can clarify or questions, comments?
No, I think that's good. I mean, the expensive story is good. I think that's how Notorious Big was signed by Puff Daddy too. Shows up in the shiny suit and the convertible. So first, I want to focus on like the investing side.
Yep.
And I mean, we can do seed or angel or series
A. Yeah.
But when you're looking at the basics and in terms of like a minimum set of things that you're looking at, what are those? And maybe the other thing is to also say like what are the things to actually avoid, in terms of like red flags.
Yep. Real quick, just to get a sense of the room here, like what kind of stage everyone at? Are people raising money? Are people earlier? Just kind of give me a feel for what people are and where people are right now.
Yeah, let's pop it into the chat. If everybody wants to just pop that in there and see where they are. All right, pre-seed,
Gotcha.
pre-seed. There we go. Seed.
Good. Go. Okay. Cool.
There we go.
Good. Cool. So let's talk kind of pre-seed, seed, and kind of what how to think about what to do. I mean, look, I think a few things to think about and to understand about raising money. And look, I've raised money 3 times. I was absolute trash at it every single time, and only got marginally better every time. So I think the overall thing is it's hard to raise money. It's a pain in the ass, and it's very random, and it's hard to understand and predict how it's going to go and where, what works and what doesn't. But a few things to think about and remember. I think the first thing is you got to remember that investing is a relationship game. Like, it's as simple as that. And so getting to know people early, getting to know people like authentically, is an important thing. And so I think one thing to start off with, just like, I think if I'm a founder thinking about how to prepare for my raise, whether it's now or for the future, I think the first thing to remember is that you can't wait until the end to do it. Like I've seen, for example, I see founders and friends of mine who are, let's just say, in the latest YC batch or whatever, and YC is this very large continuum. People like raising tons of money before they even get in, raising money after. But like, I would say this, the people that wait until demo day to go raise have the most trouble, because it's just one of those things where, and they always tell you not to, right? Like, don't raise. But the reality is everyone does it ahead of time. And like, that's the number one failure mode, I think, is waiting until the end, because there's this Mark Suster blog post and called Investing in Lines, Not Dots, right? And the whole idea is very simple. It's when you meet someone for the first time, they're a dot to you in this, like, how long you've known them. And when you meet them a second time, now you can have 2 dots and that's a line, right? And so what you want to see is over time that going up. And that's what gives people the right momentum. Because at the stage that you guys are at, pre-seed and seed, there's really only a few things that matter. One is you have some extraordinary traction or something kind of proprietary on the product side, or some tech you've built that nobody else has. Honestly, it's probably going to be pretty tough to do that. Like, it's going to be early, and it's just not normally what's going on there. So if that's not the thing, then there's 2 other things. One is you're in a market that people really like, and you have a particular approach, or your background or set of skills like matches to what they think is going to be good. So that's absolutely one way that deals get done in the pre-seed. And the third one is just like a sick team. Like, so much of it is just, do they think that you are the people? Whether and look, I think the numbers would tell you that every investor by definition is wrong, like the vast majority of times. And so whether you're the right people or not is not actually a sort of value statement, or it's not a declarative thing, but it is saying, do they believe that you are the right people to build this business, right? And so that's really it. So barring traction, right? And by I say traction, I mean like something where the chart is without fucking with the axes, like it's actually going up to the right like that, which is just tough at the pre-seed seed. So I think 99% of people don't have that, and I think it's totally fine. So the thing you have to focus on, there's only two other ways. It's a market story, or it's a people story. You just happen to be like amazing founders that have a really authentic story for that particular problem. So that's really it. And if that's the case, then building these relationships early to show this upward momentum, show a founder how you show an investor how you work with them, how you deal with problems, how you think about things, it is a huge part of getting this done. Without that, you're hoping for traction or market, right? Which is really hard to suss out because every investor is going to tell you what they want, what you want to hear. They're going to say, "Oh, we love this market. We've done tons of." It's all bullshit. It's never real, right? Like everyone's just saying that. Everyone's just saying things to you. So you have to really just make sure that you're building these relationships early, so you can qualify them as well as have them get to know you, and you know what you're getting into. It's a 10-year marriage, and you don't want to do a shotgun marriage, right? So it's. I would say my biggest advice is just make sure you're building those relationships early, and you understand who these people are, and you keep them plugged in and in your story. And then it will happen organically. Otherwise, it's tough.
Did anybody have any questions about that? Feel free to unmute yourself and just hop in. We want to keep it as interactive as possible. I see some people unmuting.
That makes sense. Quick question would be, how early is too early?
You know, I think the truth, I think a couple things, right? Every investor is going to tell you it's never too early, right? The thing to remember is, it's mostly like it's in every investor's interest to tell you that, right? But the reality is, it's also like it can also just be a waste of time, right? There's a fine balance between like meeting investors and then building the business. And at the end of the day, you should be building the business most of the time and building the product and building the team. Meeting investors is a means of doing that, and people get addicted to the other side sometimes. And that you see this like raising amazing amounts of money, but nothing else, right? And so like you have to find the right balance. I think the main thing is, you know, there's never really too early. You just got to figure out who the right people are, right? You have to qualify them. And I think it's a ruthless, it's just like any kind of sale you're doing, right? Like you really got to make sure, I always say for the first like 10 customers in your product as you're building the business is you should qualify out more than qualify in. And like you should really be focused on finding the people that are going to write you the check or write you the, like buy your product, knowing that there's a bunch of deficiencies, knowing that the product's not there, and knowing that you're behind the scenes. It's kind of like, you know, the Wizard of the Oz type thing. Like, you know, you're like behind the scenes, like operating the product, and you got to like find those types of people, right? And it's the same thing for these investors. You got to qualify them out really, really quickly and ask them very consistently, like, you know, if they're busy, if they advertise, they do seed or pre-seed, good, right? I think it's fine to have those conversations and meet them at the right time. Batch it up so it's not like a continuous thing. But maybe it's like over the course of 6 months, I'm going to take 1 month to like figure out who even the 20 people are that I should be interacting with, right? And then when you have those meetings, qualify them as like, tell me what's the last pre-seed check you wrote? You know, like how much did you write? Why did you lean in? You know, why didn't you? You know, what are things you do? Tell me about the portfolio balance. Are you and get a real sense of how they think about the world, because everyone's going to tell you they do pre-seed, and the reality is most people are pre-seed curious, but they're not really pre-seed investors, right? And so like that's going to be a waste of time for you. Whereas there are some people that are really pre-seed investors, and you want to find those people quickly, right? And those people, it's never too early. Like I think those people, like once you find a handful of those, half a dozen of them, you keep them in the email, right? You hit them with the monthly update over and over, and then it'll happen, you know? But that's how I'd say is like, give yourself, for example, say 6 months, do that first 20 meetings. It's going to be a shit show. Most are not going to be good, but you'll find the half a dozen that are, and just keep them on the drip, right? And then do a second set of meetings that show some progress in like a quarter or a few months, and that'll be the right thing. And then at that point, begin to tease out, I'm thinking about a round, and start to treat them like a partner in the business. And because now you've got a couple touch points with them, start to treat them as part of the process. Ask them for advice. Like, investors are just humans, right? They like to feel, they hear themselves talk. And so like, you know, having them that they contribute to your story is a big part of them getting involved as well, right? And you kind of suck them in that way. So I think that's the way to play it. It's never too early, but just make sure it's the right people that you're talking to, and not just anybody. That make sense?
Can I follow up on that?
Thank you.
Go, jump in.
Yeah,
jump in.
please.
Please.
Sounds good. Hey, Chris. Hey, Elliot. This is Joanne. I'm currently building a Shopify for social commerce in Southeast Asia, because Shopify, they deem it to be too difficult to build. And these are for sellers who are selling from WhatsApp and Instagram. So I've been doing a lot of market research and really validation using a prototype that I built on Bubble.io. I hack it up for 2 weeks and really talk to a bunch of people. And I think Bubble is not that, at least at this point for things that I want to build, it's not sustainable to create a more deep integration with, say, WhatsApp, Twilio, and even like shipping providers. So I'm at a stage where I kind of need to move off of Bubble and trying to raise some money. I am curious to hear from you, what are some of the tractions that the pre-seed investor would want to look at? I have onboarded a few people to my prototype, and I've done a lot of cold callings and got roughly 15 to 20% conversion. Conversion meaning like people who are saying, hey, yes, sign me up, put me on your wait list. I'm okay to wait. Like, is that a good enough traction? Or what are some of the metrics that people would want to look at?
Totally. I think the unuseful thing to start out with, it depends. It really depends. It's hard
Product
to say.
answer.
Yeah, exactly. Like it really, but I'll try to get a little bit more specific. Like I think the way to think about though is generally right. Each round of financing that you do is essentially a bet, right, for that particular investor. So for example, as a pre-seed investor, maybe the bet is that you have some interesting ideas around this particular product area, right, that have turned into a set of mocks and some early customer like interest, right, and not much more than that, which I think is generally the case for a lot of pre-seed folks. Like the bet there is, can you build the product and convert that interest into something real, right? Whether it's paying users or whether it's just like active engaged users without money. Like I think both of those things are very real. And so that's the way to think about these conversations. Like, if you've got interest in the prototype that you've built and you have some folks using it in a wait list, right? You want to just make it feel like there's strong demand. And the only thing that I need now is I just need to get this built. And the minute I get this thing built, then it will convert over. So frame the story around that and around, and I think the traction there, and so the sort of traction should all about be leading up and painting that story. So whether it's volume of signups, which I've seen a lot, right, which is like volume of signups, or like active users or whatever, like it doesn't really matter, to be honest. It's just around framing whatever's happening to a bet. And the way to time this thing always, and again, it's not in my interest to say this, but like the way to time this stuff is always, you want to have a hint of the new bet without that much though, so like, meaning you want to say that, hey, look, I'm thinking about take this example, like I've built this thing in Bubble, I need to convert it over. Like you got to say like, hey, look, there's like 2 users that are like trying to pay me money now to go do this, or like 2 users like they're just like pushing the edge of this thing. And you want to have some semblance of like getting to the next thing or the new thing without too much of it though, because otherwise then it's a different bet, right, so to speak. So you want to like de-risk the bet enough to the investor to show them that it's actually not that risky of a bet, and like it can get it done, and this is just going to help me get it done, right? And so that's the way to time it. Have a little bit, but not too much, and then frame your entire story or the traction or whatever you might have, whether it's users or signups or some metric that shows that. Like it's all about consistency, I think, right? It's whatever story that you have in the product and whatever story that you have for the business to make all of that line up to paint the narrative. And so, for example, if you're building a new product that's like, hey, look, we're building, like, take a Shopify product, right? Like we're building this new product that helps like, the SMB, or like, takes like a new seller, like you said, in APAC or something, like a new seller who can't use Shopify. There's like a large group of people there that like can't use Shopify for whatever reason. And like we've built something that allows them to do that. So you just want to say like, look, like the bet is, one, the market is real, meaning there's a lot of demand. So showing your signups and velocity of signups on little to no money, or like on paid ads, or like nothing much and just word of mouth, that's a really strong sign that market exists, right? So that's the bet they're going to take, that market exists. The second thing now is like, you can actually build this thing and people are beginning to convert. So I think it's actually like, look, I've built this thing in Bubble. We've taken it as far as we can in Bubble. And the good thing is I validated now that we can actually build something that this market wants. That story should be enough to at least get some people interested. So now it's about finding the right people. But if you frame it that way, then you should be able to get the story like consistent and done. So people, like, it sounds like you have the pieces that you need there. Now it's just about finding the right person to back it.
Awesome.
Does that make sense?
Yep. Thank you so much, Chris.
Yep, totally.
Anybody else want to add anything on there?
Thanks so much. Very interesting. So we like I want to follow up on your discussion. I think it could be interesting because we actually kind of took a little bit step further. We raised angel money. We are building like HubSpot meets Asana applied for partner management in tech companies. And he builds a little bit of a product. It's not enough to generate like huge traction, but we do have some traction. And I'm like, do I wait for the next like 2 months until we get more traction and then start to fundraise? And I literally had this discussion with my product manager just like a couple of hours ago. So like, I think longer term, you mentioned within 6 months, you focus 1 month on fundraising, and you move into building, and then do you do like, how would you do it like longer term? Like,
totally. I mean, I think this way, like you should have like the investor update email that you're just constantly throwing on top of, like throwing people into as you meet them. And of course you should opt in, but like if you don't, like that's fine too. Like the reality is people, you do it, you do whatever you got to do to like get the things you need. So, you know, like you do what you have to. I would say that the real way to do this is just like you said, right? Like you meet the folks, throw them in the investor update list, engage them, see who responds, ask for specific stuff, right? And talk about the market and see who comes to you that way, right? Put the information out there in a one-to-many way, let people see it, and then allow them to come to you, whoever engages, or not, or like you can all see who are opening and like do the individual follow there, right? So I would say build a relationship, like the relationship. I always think it's a weird thing to say, just because like it's a series of like 30-minute meetings once every year, you know. So it's not like it's not like the most meaningful thing, but like that's really it. It's just increasing the frequency of that. Do they continue to show up? Right. One, do they have new things to say too? And do you think that they're actually really looking at this area? Right. And I think just pulling that is what you got to do to do the longer term thing. Does that make sense?
Yeah, it does. Yeah, thanks.
Totally.
So you mentioned the investor email a couple of times. You mentioned it monthly. What's the right cadence kind of for this audience? I guess, is it monthly? And then the other things like what's the best format and what are the key things you kind of look for?
Again, like I'm trying not to give these like garbage generic answers because it does depend. I've seen successful ones monthly. I've seen successful ones quarterly. I think the key though is consistency, right? And I'll give you 2 examples, right, of companies that will remain nameless for now, unless you catch me later drinking and I'll talk about it. But like I would say, the 2 examples. One company sends you kind of random sporadic updates. You know, I'll get one on January, and then like the second one in February starting strong because it's the new year and we all got a bunch of goals, and then in March don't hear, and April don't hear, and like maybe June I'll hear a small blip, right, like a shorter update, and then nothing again, and then in November another one, and then December get the long dump, which to me, when I see those without even reading the content, I know it's strong start, big plans, didn't execute, trying to give yourself some motivation in June. By the end of the year, realizing you need more cash, so you're going to butter me up in November and then ask for the thing in December. Like that's how I would read that, you know, without even knowing the contents. Whereas you could like and that's 6, 7 emails, right? Whereas I would take someone who does once a quarter, end of the quarter, right? Like let's say April or something, because you've let March kind of matriculate and figure out like end of April, not even a super detailed one, but a punchy email, just a paragraph or 2 with kind of the main parts of the story, 3-4 times a year. That's a better story to me than the first one, right? So I would say be easy and starting yourself. It's all about setting the right expectations, right? And just making sure that the investor knows what they're getting into. You know what you're signing up for, and don't overcommit yourself, right? To doing, because these things are hard to write. They take a lot of time, right? It's not easy to do these things, and sometimes there's no progress in a month. And it can be overwhelming. What you want to do is build meaningful lines. You know, a chart, like again, this like dot and lines thing. A chart with a bunch of random dots is not useful. A chart with 3 dots going up is very useful, you know, and is the signal you want to send. So I don't think there's a right cadence. I've seen success. Like again, I have a company that does monthly updates, and they're just fucking amazing at it. Like I couldn't do it. Like I remember saying things like, it's a lot of work. If I would recommend quarterly. I would recommend just like do a quarterly punchy one. Don't do the full like 3,000 word thing. For your actual investors, I think that's good. But for the marketing and like that investor email, keep it punchy. Just keep the story consistent, and give them like what you want to do is ultimately in every email, they should be able to scan it on their phone in 30 seconds while in line, right? And be able to take away the tweet sized like story that they can pass off very quickly to anyone else, right? That kind of matches. Say, oh, first time I met them, they were doing this, right? Just kind of product shift. Second time, but like they were still building. Second time, they built the product and actually people were starting to use it, right? And third time, like, and so you want to be able to make sure they can quickly get that out of it, because that will help them remember, for one, and two, that'll also help them make sure they can pass it around to the right people, because maybe it's not that investor, but it's a good friend, right? Investors are like, they have to share things a lot because not every deal is right for the right person. So just making sure that email that you send has, they can read that and walk away with that thing is the most important part.
Just to follow up on that, when you're forecasting, especially like with the cadence that you're talking about, either let's say it's monthly or quarterly, and you're trying to, how much would you guide folks to forecasting what's coming down the pike, like deals in the pipeline or something like that? Because one of the things that I'm in healthcare, you know, deal cycles are kind of all over the place, like enterprise deal cycles with hospital systems and physicians. The pandemic hasn't made things easier. So I'm wondering, you know, how much am I setting myself up for failure, which is like, oh, we think a deal is going to come in February and it comes in April or May, versus not forecasting that deal until we get the contract signed. And, you know, just wanted to get your guidance on how candid you want to be about things that are coming down the pipe versus, or is it better to hold that information until you're kind of solid on it and you can announce it in these, you know, sort of externally facing updates?
Totally. I think the answer is, you know, you always want to be fairly candid about what's going right and what's not going right, you know, just because, like, at the end of the day, you're also looking like it's like one of those things, like, let's say you're like, I always hate these like dating marriage analogies because it's just not very good, but like, that's the only one I've got. So I'll just run with it for now. But like pretending you're somebody you're not, and then getting married and then like revealing who you are is not going to work well, right? And so I'm not implying that's what you're saying, but just as the extreme, right? Like, that's not what we want to say. So you want to show bits and pieces of like what's really happening. But look, the reality is every investor founder relationship has that into it, right? Like, it's always like the first meeting after you wire the money, like, all right, now tell me what's really going on, you know? Like, it's just always that dynamic, and I think people are aware of it. And look, it's just part of the dynamic. There's nothing you can do about it. So I think it's good to let on some of it, right? And let on some of it, because you also want to signal like, who can help me with this? Because look, doing a 18-month sales cycle, like as a new startup, is mine. Like it can like eat your mind, you know, because you're just like, you know, waiting for this thing to close. It's a whole thing, right? So I think letting on some of it is useful to see if you can get the help. On the other end though, like, look, if you're building a healthcare startup, like, without even knowing what you're doing, like, I know it's going to take 18 months, you know, to 2 years for some of these sales cycles. Like, it's a normal thing, and it's totally like, I think it's totally reasonable, and the folks that are on this should understand that. And if they don't, wrong investor, right? Like, keep sending the updates, but don't count on them at all. If they're asking why doesn't it, like, you just know that's the wrong partner for your business, right? But there are ways to kind of signal how those things are moving along, and signaling the learnings from it, right? Like, hey, look, like, we're planning for a 12-month sales cycle, you know, for example, you know, we're working on a deal with Cedars-Sinai as an example. Right? I'm doing some with Cedars-Sinai. We hope to get this thing done. Being able to lay out, like, without even saying like how things go, like, there's ways to update progress that look like progress without actually having to close the deal. Meaning, hey, look, like, we had 20 meetings across the org. We've mapped out the structure. We know who the buyer is. We know what the decision-making criteria is. We know what we need to show. We also know where we're deficient now, right? And we know, and we have our next meeting at this particular time. In the meantime, we are building X, Y, Z to get this thing done. So by the time next time you get this up, that we should have had the meeting, right? We should be on to the next phase. We're not going to be done yet, but we're going to be on to the next phase, and we should be close. So being able to talk about that, but also saying, hey, look, like, and then at the end saying, I'm looking for someone to help me guide through this. Is this the right thing? Are we getting jerked around? Is there a way to do this faster? Is a way to add that up and say, look, being honest about progress without having to show the revenue numbers and all that and everything. So I would say that. I would also say one thing to caution about is, you know, I think the logos matter, you know, when you're talking about pipeline. And I think it is helpful to talk about, because look, investors, again, like, they're just, the brands and logos like matter, and it's helpful. At the end of the day though, like, look, I've been an early stage founder, and like, the pipeline is so in flux all the time that, like, you know, the reality is, who the hell knows, right? Like, that's the honest answer that I remember going through. It's like, man, I have no fucking idea. I think they'll close, but who knows? And like, it ends up not, and like, the one I never thought would closes, you know, like, that's just how it goes, right? And so you just want to be careful about which ones you index too heavily off of, because again, when I draw the line as like reading these update emails, it's very easy to say, well, like, you've been telling me about this, like, you know, Cedars-Sinai deal for 6 months, and like, now it's not looking so good. And now you're telling me it's a different deal that's going to come into play,
Mhm.
you know, and it can start to look messy and be like, well, now I don't know what to trust. Maybe they don't know what's going on, right? And so I think you got to be careful about when to use a logo, when to not. And it's better to say, look, like it's better to be a bit more generic sometimes and say, look, like we're working with 3 late stage enterprise deals. We're mapping it out. We're figuring it out. And this way you have a little bit of freedom to like mix and match and play it out, because the reality is that's what's actually happening. And so don't get too, but like when it's a good logo that you know is going to close, right? Or it's like a good one that you have a personal or whatever, it's good to use that as signal, right? And to talk about it, but also to set the right expectations so they don't get too latched onto that, and use that as the proxy for how to evaluate everything you're doing.
Cool, thanks.
Does that make sense?
Yeah, it makes a ton of sense. Thanks.
Cool. Anybody else want to kind of have a follow-on question? Otherwise, I have something else that I want to talk about as well. Make sure we get it in before we stop. Okay, cool. So let's switch over to like your focus areas, right, Chris? You know, one thing is, of course, RPA and kind of that whole world. We got at least one person that's interested in hearing about how you see the space, you know, the success of UiPath, how, you know, what is that doing for the rest of the market? Is there, you know, is that creating other space for people to come behind? What are you seeing out there kind of in this space?
Totally. So yeah, a few things. I mean, markets and things that I like. You know, like I said, I'm spending a lot of time big picture. I spend a lot of time in. There's going to be a bunch of generic words, so you know, excuse me for that. Like, you know, for automation and just like business apps in general. Then I think, but with a focus on automation, I think the second piece is a lot of dev tools, right? So whether it's data tools or there's a bunch of them. And then third, I think, is just vertical software. And I spend a lot of time in verticals, whether it's health, I do a lot of healthcare, do a lot of real estate, insurance, like all that type of stuff. Because there's just a lot to be done there. And I think it's a super interesting part of the world. So, you know, in total, that means absolutely nothing, because anything can fit in those buckets. But I would say generally those are the areas. Now, talking about automation real quickly, I mean, I think a few things. One is, big picture, I think I'm super excited about it, you know, and I think despite the fact that I think a lot of people can look at it and say, well, UiPath is won. And I actually think it's like, I think UiPath has won in part of it. But the reality is that the world that they're going after is just much, much bigger than that, you know? And the automation story is finally happening. We've been saying the same shit for like 30 years, right? These computers are finally going to start doing things for us. And like, it's finally starting to happen. And so the reality is, that market's going to be really, really big, you know? And so I think broadly speaking, the way I think about it is you look at like a UiPath or any of the RPA, like I just call it sort of V1 RPA, right? Like they were a bunch of services firms before, outsourcing to people in India and the Philippines, and they built some software to, you know, to make that a little bit more efficient. And they decided, wait, like this is actually not bad. I'm going to sell directly to companies, right? Like that's the story of RPA. And so it's kind of gotten to a place that like people believe, and then now Sequoia has basically given UiPath billions of dollars, right? And they've plowed that into marketing. And the great thing is everyone that's coming behind that can use that marketing to their advantage, right? Because remember, the thing is, UiPath is the winner in a narrow use of RPA, but they've been around for 20 years. Like that product is 20 years old. You know, like I've worked on products that are 10 years old, and like getting anything to change there is just a nightmare. So let alone a 20. Now I would say this, they're also very strong. They're aggressive, they're sharp people, they're not idiots at all. So that's something to contend with, but also just be aware of what's holding them back and what they're thinking. So I think that's the first thing. I think the second thing to think about in automation is, look, they plowed a bunch of money into this market. A lot of people are aware of it now, but the reality, and we all know this, right? But like the reality of the success for these automation programs and these big companies is not the same that we've been told, right? Like everyone knows that like it takes a lot of maintenance to get these bots set up. It takes a lot of maintenance to keep them going, right? Like, and the reason is, at the end of the day, it's just not a very scalable thing right now. Like the way I was thinking about it is like you have task automation, which is what UiPath is good at today, which is like take a document, for example, like take an invoice, grab the invoice number and throw them into some like legacy ERP that I've got somewhere that's an on-prem thing, right? Like that's the use case for RPA. It's a task, it's like one part of a whole workflow. But now what we're trying to do is expand to the entire thing, right? And like automate. So now people are like hyped on okay, we've gotten these bots running, like I'm automating invoices, great. Now let's do something more impactful. Like, let's just get rid of the low hanging fruit, right? And that's where all the trouble's starting, right? Like they're unable to do that, and it's a much harder thing to go from automating a piece of the workflow to automate the whole work. Because look, at the end of the day, a workflow, when you actually map it out, let's just look at this today. A simple legal workflow to generate an NDA, not that hard, has over 80 different variants. Which means out of all the different things you could do, like there are 80 different versions of documents. So like following that trend is just a hard thing to do, and figuring and so there's a huge opportunity now, I think, for folks that are thinking about automation in general to focus on helping companies get real value out of it, right? Like the V1's done, which is great. Now let's build the end-to-end stuff that can get real heavy value out of these customers. I think the stunning fact is when you look at UiPath, I've talked to a bunch of customers there. Very, very few have more than 50 bots live, and 50 bots, it's hard to understand, is that good or bad? It's all, I couldn't tell you either, but the promise is hundreds and thousands of bots. Like that's what they've been promised, thousands of bots automating away tons of work. The reality is though, very few people get past 50 to 100 bots because the system just starts to fall on itself. When you don't actually know what the workflow actually is. I mean, if you think about this, like an invoice workflow process, which is not like a very complex, take a customer support process, right? Like you're building customer support and you're trying to automate that workflow in. You've got to take in 10 different, you've got Twitter, you've got email, you've got, Zendesk, you've got a bunch of stuff you've got to put into one place. You've got to try and standardize this thing. You've got to figure out all the different pathways and all the different things that you could respond to those things with. And then you have to go execute on it and then log them all and close these things out. Like that whole thing is really, it's just a heavy thing. And so RPA does one part of it, and UiPath does one part, but there's this whole move right now to capture the entire thing. And then that's going to be a really valuable part, right? So you're kind of moving from what I call like high velocity, low value work, which is a lot of the rote kind of like, UI based integration type stuff they have, to now we can tackle kind of high velocity and high value work, and taking away like an entire customer support workflow and automating away. And you're not going to do the whole thing, but where it was 100% humans, you can do 50% humans now or something like that, right? Have a bunch of machines. Like to me, that's the opportunity. And where I think, we'll see. UiPath knows this. They're not idiots again. And like they're doing a bunch of stuff to work around it. They're trying to make it happen. And again, I think the other dark horse in this story is Microsoft. Again, also not idiots. Like Power Automate is pretty good. And they've seen success in building something and just shoving it in customers' hands for free, right? You just see Microsoft Teams, right? Like, and that really hurts Slack in many ways, right? And so they're not, I'd say that's the fear here, is that these guys, like these companies are not idiots, and they're fast and they have money and they're willing to spend it, and so that can create a lot of confusion. They can buy companies and they can slap stuff together that actually isn't very good, but still can win, so that's the fear here. But I do think the idea of building these real end-to-end workflows and automating away big chunks of work. So as a head of automation or head of a department or biz ops or something, you can actually see what everyone's supposed to be doing. You actually see how these things are flowing and begin to actually measure what's really happening. That's really exciting for it. And it's going to happen. That's going to continue to pan out for the next 10, 15 years. So I think if you're working on that area, like I'd love to talk to you, because I'm just curious what you're seeing as well. Happy to share more about what I've seen and the things that we're looking at. But I just think it's an area, like, I think if you fast forward 10 years, like there's no way this isn't everywhere. The question is who's doing it, in what form and how, but like, that's the thing I love about this. Like it's for sure going to happen. And it's a lot of what we built at Rainforest, right? Rainforest is automated QA, which is watching a human do this and have it replayed as a test, right? And testing over and just getting a little bit smarter about it and being able to add some of the AI, pixie dust in there and like get some of it. So there's a little bit more variability to what you can do. I think it's going to be huge. And so the sort of chink in their armor, so to speak. I don't know if that's the right expression or even the right way to say it, but like in UiPath's armors, they're old company. They're very good at task automation, but going beyond that is going to be hard, And I think the last thing is they're very focused on the business user. They talk about the citizen developer a lot, which is good, but also has its flaws. Like there's only so much a citizen developer can do. And so you have to understand those balances. And I think there's a way to thread the needle where you can really attack and grab a bunch of this market. So
to kind of keep going on like the competitive landscape, let's say I am working in this space, right? I'm building a new RPA company that's focused on, and I have, I don't know, healthcare or whatever, right? How do you see the competition there? Because the way I always see it is, I mean, workflow automation is not new as a thing. Like you mentioned, like UiPath itself is 20 years old. They're just like a generic B2B SaaS kind of offering, right? It's just like,
Totally.
we'll just automate anything, but UiPath is going up against specialized systems for a certain function, right? Like you use like the invoice example, right? Like there's invoice processing products. I mean, we both know this. There's invoice processing products that do exactly this, right? Like something that is much more purpose built for that single thing. So how do you see like competition there? Because that's always been like the friction for me, like in that kind of space. It's hard to just be so generic because then it's like you don't apply it to really kind of anything.
Totally.
So how do you see like the competition there, and then like, and I guess the second part is like, how do you pick an area to focus?
Yeah, totally. I mean, I think it's true and it's right that like you have to focus on a particular area, and you need to like, again, UiPath as the generic tool to do a little bit of everything is okay at their stage now, but it's not a great way to start because it's just too hard to get going, right? And so I would say with these kind of horizontal business apps, the way you do it is you got to be very specific. You got to build horizontally, but you got to be hyper specific in your go-to-market for a while, right? And in your messaging, the product, everything you do has to be geared towards one use case and doing that thing really well. You know, you got to build it open enough where if you want it to become a horizontal thing later, you can, right? Now, I think there's counterpoints to that, and there's a lot of folks that disagree, that think you should go fully horizontal from the beginning. I think it's a totally fine strategy if you're famous, you've got a lot of money, and you've got a lot of friends. You know, like those things are totally fine because this way you can literally just build the perfect product for everybody from day one. Like if you're Dustin Moskovitz at Asana, right? You can build like a really generic to-do app for anybody to use because you have $1 billion, you know, and like you can make that. But I think for most people, they have to think about it in a little bit more of a sort of like, you have to be a little bit more piecemeal in how you think about it, right? And you got to think about the islands you're jumping to and make sure you prove each step, by the way. Being a little bit, scoping it down and being more targeted is going to help you a lot. And so that's how I think about that. And I think that, how do you pick the area? I mean, I think the truth is you got to start with what you know and what's authentic to you. You know, what's going to help your story? What's your own background? Where have problems like this matched up in the past for you? So have some kind of story that helps you, because that's also going to help you. One, you find the customer, is going to help you understand the problem. It's going to help you raise money, right? So I think that's a really important thing. Secondly, it's just got to be a big market, right? Like I think the obvious one in RPA, at least, that like a lot of people are tackling now, that I think is a good one, is automating away RCM, right? So the whole revenue cycle process of like, as a big provider collecting money from the hospital, or excuse me, from the payers and the insurance companies, and filing the paperwork and all of that. Like that's a whole area, right? Generally, though, think of it this way, right? Like there's two ways to look at all this stuff. One is, like you said, there's like specific purpose-built invoice processing software, for example. Like that works for a lot of stuff already. And like in that case, you wouldn't need an RPA overlay because generally that works. The way, and I would say, listen, I think the reason why RPA, like everyone talks about, because it sounds promising, but the reality is I think very few people have interacted with RPA, because at the end of the day, like it works really well right now for legacy industries, right? Like the actual place is like, if you can build like good software that humans can use without dealing with all this stuff, but like it actually works decently well to just do that, you know? But the place this doesn't work is like when you have a lot of paper, a lot of processing, and at the end of the day, you've got an old SAP and it's like on-prem SAP system somewhere that you can't access via an API.
I was going to ask that, like, should it be like an on-prem kind of, at least to make the surface area kind of smaller to figure out where to attack? Like, should you look at on-prem?
I think so. I think anywhere that has old systems that have to be old because it's a regulated area. So financial services, right? Healthcare, insurance, you know, like these things that have to stay on these old systems that can't move off of it. There's always old systems and a lot of paper. And both of those things are like good grounds and like good place to start to see how you can just automate away a bunch of it. And then you can expand from there. So I think that's a starting point for a lot of RPA right now. And then you build from there, right? Because like a lot of the other stuff is API, like you can just do it via an API, and like, you know, you can, you know, or like there's a lot of people building for it. So I think and having your domain be a advantage, a competitive advantage for you is like a good thing. So like going deep into like insurance claims, into claims processing, right? Like is going to be an advantage because a lot of people just don't know or don't care, you know? And so being deep there is going to help you.
Okay. Let's switch over to taking questions. Let's talk about healthcare investing. You know, how much are you seeing there, different areas, you know, where do you see kind of the areas for, you know, exploitation and opportunity, I guess?
Totally. I mean, healthcare, I think the benefit right now for healthcare entrepreneurs is that every investor that was just a classic investor is saying they're a healthcare investor, you know. And so you have a lot of people that say they're interested. The negative is you got a lot of people saying they're interested, you know, and like, and it's not very clear who's really interested in who actually is and who's really going to write the check, you know, because there's a lot happening and it's hard to know, and it's hard for them to also calibrate what's going on. A few things I think that really matter here is just understanding the big trends, right? One is just the whole value-based care thing, right? Like there's a lot of momentum behind that. There's a lot of reasons why it may not work as well, right? But like, you know, tying yourself to one of those things, and yeah, I think that's the first thing, right? Like this entire shift towards how can we have a provider take on more risk, and how can we have them be responsible for the care instead of just doing pay for service, right? Like that's an entire set of tools and products around that. One is sharing information between different providers, so you have a better picture of who your patient is, you know what to do. Two is then actually building things that help you look at all the information that you have now, and then help you figure out what to do. You know, like, should I do X, Y, Z instead? So this way I make sure to check in. They like, you know, I check this thing that I normally wouldn't have, and then now I can catch something early and save myself and the payer and save the patient like a lot of pain and hassle and money. You know, like that's the thing. And then third is just more analytics on top of the whole thing, right? Like, how am I really doing? Once you shift to, as a hospital, my entire system was built for, I'm just booking fees, right? Like I'm just booking money, come in, I'm trying to bill you up the ass for anything I can possibly find, right? And send that back off. When that entire thing becomes like, I need to now actually make sure you don't die, because like I actually have to care now. Like the way a CFO or a hospital that runs on a 2% margin like has to think about it is just going to change. And so the entire set of tools that they use to both think about how you manage the whole business, both at the kind of provider level, then the kind of patient level, right, is really important. And a lot of that is just sharing information, right? I think a lot of it is both, it's just, especially with all the interoperability stuff happening, it's just a good time because now you can just grab data. Like there's going to be it's not all there yet, but like a lot of it is there. We can just grab data from different providers, different payers out there, and using that in a way. And the story is like, we're grabbing data, we're throwing some AI on top, and like this will happen, right? That's a story, and it's mostly garbage, but there's truth. There's bits of truth in there, right? And so just finding what actually works in that, and adding real value is a good thing. And I think the thing that I always talk about with healthcare entrepreneurs and investors is like, you know, your first deal obviously is like land the big, like I keep saying cedar, but like just take cedar, right? Like landing the big cedar contract is like a big deal, but that actually is not going to get you to the next round, because most people can do that, you know, because especially most of these folks like Cedar spends a lot of money on a bunch of stuff, you know, so like saying that there's great, but getting to that second one is really important. Like I think that's a distinction in healthcare. And so I think any of those things, so like healthcare APIs are like all the rage right now. I think there's a lot of reasons why those may not be good businesses, but actually really useful for the world. But who knows? I certainly think they're interesting. So I like them, but like there's healthcare APIs. There's a lot of the kind of like remote patient monitoring is all the rage right now, right? Like take this device home. And again, it's all about data collection, right? Like take this device home, measure yourself, watch it every day, send it back. The machine will help figure out like, is this person at risk, or does something look weird and the provider should get in touch? I think a lot of the new kind of like reimbursements that payers are giving you really help with that, because now they can get paid to do this. The other side of it is like, think of it this way, like now that you've got a bunch of data coming in, actually doing something like that is just really hard. Like it's just a lot of data to parse. And I think most people don't actually know what to do with it. And so being able to actually, and it's not just actually like figuring out what to do, but then actually doing it, right? Like most of these places are really strapped for time and resources, but actually helping them take advantage of that information, whether it's communicating to the patient, whether it's staying on top of them, all of those things really happen. So I just think like, it's hard to, there's many areas interesting there, but that I like, and anyone in healthcare, I would love to talk to you just to one, hear what you're thinking and seeing, but all of that is changing, you know? And I think the scary thing is that it's a regulated area, you know, and it's hard. And these sales cycles are long, but contracts are big, contracts are sticky. And if you know what you're doing, especially if you play it right, like there's just a lot of money to be made on all sides, right? Because it's just so inefficient today that making it better. And so just knowing who the real buyer is. Exactly, right? Like I think once you get it and you know what you're doing, it's going to work, right? So, but I think just knowing knowing where the real money is coming from, knowing where you sit in the entire ecosystem, and then being able to play that to your advantage is is a good thing. But I think also like qualifying your investors here is really important, because healthcare is one of those things that may not have the like 2 years to $1 billion company, you know, and so being able to understand who's got the patience, who's got the time, and also, you know, because at the end of the day, like not every round is perfect, right? And not execution's never perfect, right? Despite what we all tell each other and tell ourselves, like it's never perfect. And so when things go wrong, and especially when it's as binaries in healthcare, which I need to land this big payer, for example, and like they pushed yet again, but I know it's a real thing, and you need an extra year now of cash to get this thing, who's going to write you that check? You know, like, and real healthcare investors understand that and will, you know, but the ones that are looking for the quick cash, like they may not be the right people. So I'd say just understand that and understand who these people are. But I think it's a really exciting time for healthcare in general. I think we're finally getting to a world where I don't know what the answer is, but I think people are actually trying to figure it out now. Like and the structures around it are actually helping out with reimbursements, with more data open, and like, you know, there's just and the funding environment too. So I think there's a lot of things that make it a better time now than was before to work on some of these problems. And you know, I think it'll like, you know, enterprise software is great, but like, you know, this probably is a you know, bigger net benefit to society and humanity. So I think it'll be really exciting to see.
Fahad, did you have anything that you wanted to ask as a follow up to that, or did that cover it?
Just love your you know, I've been a healthcare operator for 10 years now in a variety of different roles, and I have my own startup now, so would love to take this conversation offline. I mean, I think that you nailed it though. Like, you know, there's a ton of areas, and maybe just to piggyback off what you were saying, for anybody else in the audience that's interested in healthcare, there's a lot of very simple problems that need to be fixed in healthcare, so you don't need to find the most complicated thing to do, but you need to find where the efficiencies are, and you need to figure out the economics around it, just to reiterate Chris's point. And I think that, you know, the distortions in the market size are so big. You can solve a simple documentation problem, and that can be a massive company that can add massive value.
Totally.
Nice.
Yeah, no, I totally agree with that. It's one of those markets where it's not B's, there's T's at the end. These are $1 trillion markets. And so like, if you just get it right, people will use it. And the margins are so slim in healthcare that when it really works, people are going to use it. Like if you can tell the CFO, like you can not worry about living day to day anymore, and like you can get a little bit ahead, like people are going to they're going to buy it. And so I think like Var said, like there's a lot of interesting stuff happening there. And as long as you can play the game and know the right message, the right people, right, and understand the politics behind it all, like you can definitely make it work. Cool. And yeah, Farhad, I would love to talk to you, by the way. So feel free to hit me up, and or I'll find you somewhere, and we can keep going. Yeah,
well, I'll share all your stuff with everybody that's here, your contact info.
Sweet.
So we got a couple more questions. We got 5 minutes. So I want to make sure we get through both.
Yep.
So in terms of going from C to A, Sean, this is from you. If you're still here, are you still here? Oh, it dropped. So should I read this question? Yeah. Yes, let's read it. Going from C to A and kind of the inclusions of VCs versus syndicates and angels. I guess this is a cap table question, right? Like, is it a problem versus not? How do you see that? Like how clean should the cap table be? The importance of carry, you know, that kind of thing.
Yep, totally. I mean, the cap table, you should keep it as clean as possible, but that's also not very useful because, you know, again, everyone does what they got to do to get the job done, you know, and like if you got to scrap money together from random people to get it done, you're going to do that, and you should, you know, and being pure about the cap table is absolutely the last thing to do, you know, like grab the money and stay alive. That's always the goal, right? So I think that's the most important thing. Now, that being said, like when you have the choice, I think the thing to remember is just these people on the cap table forever. You know, and like chasing people for signatures is a fucking nightmare, you know, and like it's just annoying as fuck to have to do that on a regular basis every time a funding round. Like, just FYI, there's a DocuSign, please send this thing, please sign it, or like the wire hasn't come through. Like it's just a whole thing, you know. So I think you want to keep it easy, you want to keep it simple. I think we went from the phase of mostly VCs on cap tables to then VCs and a huge slew of angels, to now being, I think, a cleaner structure, which is mostly VCs, and then a few angels, but rolled up, whether it's into a syndicate, whether it's in one of the, you know, the angel list roll up thing, like whether it's
rolling fund or whatever. Yep.
Yeah, exactly. There's a lot of ways to keep it simple. So for you still get the upside of having to engage with all of them and having those folks behind you and supporting you, but also not having to do the admin work of dealing with 70,000 you know, like with a bunch of people on the cap table. So I think that's what I think about it. I think that's the first thing. I think the second thing is, like, the one question to ask yourself around who's raising money is, who is going to write you that second check? You know, like, I think that's the most important thing. Nothing is ever perfect, and if it is, God bless you. You know, and I'm proud, and I you know, I wish I was as good. I'm certainly not, and most of the founders and a lot of people I meet are not that way. And there are stumbles, and the question is always, when things go wrong, and I need an extra year or two of cash, who's going to give you that money without hassling you and understanding the journey? That's when a venture investor really shines, I think, and the right person can really shine. And so that's just the thing to remember. The angel syndicate will not be there for you. That's the reality. Letting them on is a good thing, though. I'm not saying don't, because I'm part of many. Like, for my own reason, I think it's a good thing. But like, that is just not, like, as a real partner to the business of, I need $2 million now, you know, because like I need to make payroll, you know, like the syndicate will not be there for you, you know. And so you just remember that. And I think that's the one thing to remember. There's just understand the pros and cons of both. I think they're very useful combined, but I think people lean really hard into like, VCs are bad, like I'm only raising angel money, and they forget that like this is a 10-year journey, and those angels are like in many ways fair weather fans, you know. And then on the other side, you know, being pure VCs also, because like, look, VCs are not necessarily really value add, you know. So like understanding the other side and understanding, get real operational experience, we're going to jump in and help you on real decisions, is also useful. So just use both those accordingly. I think you'll be, and it should be good.
Cool. We got 1 minute left. One more question. Any views on the business intelligence tools market evolution? I guess you can throw all the latest things in there. I don't know whether it's Looker or Snowflake or Domo.
Yep.
Any thoughts on that really quick, and kind of a quick blurb?
Yeah, totally. Look, as with everything, there's a lot of change happening there right now. And we've kind of gone from, like, I think the big change is this: we've gone from this batch to streaming, right? Like, you're going from a lot of batch reporting to streaming. You're going from, you know, these big kind of messy data lakes to something a little bit more structured in the data warehouse, right? So there's a lot of stuff happening. So I think across the entire stack, whether it's, you know, kind of storage, whether it's the ETL stuff, whether it is actual visualization and making use of it. And then also there's two ways to think about it. There's the kind of like, I need this all the time, operational analytics, right? And there's a whole set of, there's an entire pipeline plus visualization for that. Then there's one-off stuff, which is actually really frequent too, right? And there's also the pipeline to get that stuff, where it's like, collect as much as possible. Don't need to structure, don't need to think about it. It doesn't need to be super performant. And I need some kind of surface area to then deal with it and build dashboards, build analytics, and let people interact with it, right? So I think both those things are definitely happening, and really interesting and important. And I think the question there is always like, is the change real? Because, you know, and is it important enough that people will spend dollars on it? You know, and which are both obvious points, but I think that just making sure that, you know, like, you know, a prettier looking dashboard is not going to sell the product, right? Like, and there's not enough. But do you enable real change for the business? Meaning, is a business analyst now going to be able to get the insights that are like, you know, not like the non-operational insights very quickly and in a way that can be shared and worked with? Like, that's a useful thing. You know, and so there are different ways around it. Or like for operational stuff, how can we make sure that like we can really trace the lineage back, and like, you know, when things go wrong, you can like quickly find out. So like, just I think understanding the problems in those areas and for the company, and then just making sure the thing you're doing really helps, that is going to make money and is going to be a good business. But things that are like, you know, we have a better look, like Domo's ugly, so it's better Domo. Like, that's not going to be enough, I think. You know, and Domo is ugly. But anyway, so. Just had to stab them on the way out, but
of course.
Anyway,
cool. Appreciate it. Well, I appreciate your time, man. Hopefully this was helpful for everybody that joined. Yeah, I mean, Chris left his email in the Zoom chat. Of course, that disappears into the night once we close. So I'll put it in our Slack channel as well. I invited everybody here. But thanks again, Chris.
Awesome. Thanks again for the time. Look, it was great to chat with you all, and then looking forward to hearing more from you. Again, hit me up anytime. I'm always happy to shoot the shit and chat, whatever. Again, if friends of Elliot are always friends of mine, so I'm happy to talk about it, whatever. But look forward to seeing you all around then.
It was great. Thanks for taking the time.